Hello, welcome back to Core Finance. I'm Matt Brown and I'm joined again for our second video today by Shaun Richards from Not a Yes Man Economics. We did a very interesting piece. Please take a look at it with regards to unsecured credit in the UK. And that probably leads on quite nicely to our next topic, which is the pound versus the euro. Now, one's looking quite attractive, the euro, and the pound not so. So what's your take on this, and where can the pound go from here?
Well, there are various issues here. Coming back to the previous discussion a little bit, a factor in this has been the way the Bank of England's eased policy. The pound was already weak. Now, I'll add to that. Here's something that has got quite complex these days in central bank moves, which is when everybody expects them to do something, the foreign exchange market moves. So you get a lot of people arguing, saying the Bank of England did this, oh, look what happened to the pound, nothing. Mm-hmm. Well, to my mind, they're looking at the wrong date. You don't look after the event these days, you look before. You can see this in a lot of things, Bank of Japan, European Central Bank, Federal Reserve, and so on. So we've seen this. And what has happened, if we take a broad brush sense, obviously there was moves in the US dollar, so we got pushed down to 121. There was that flash crash night, still a debate, I think, as to how low we went. Anyway, somewhere into the 1-teens. That phase ended, so we've strengthened against the US dollar. Now, however, though, we've got a strong euro to face. So this time around, we've been pushed back against that. And this poses quite a few issues. And here's something just from this morning on sort of both sides. I've seen in one news report, weak pound, people saying that that's potentially inflationary. True. Mm-hmm. More things are priced in the euro than they used to be. Some things like perhaps car components. People were talking earlier about food. Actually, we import a lot of food, so that's a possibility. On the other side of the thing, and here's a thing that sometimes you get, French business saying the euro's too high.
Yes, well, I mean, that's going to be the issue, and certainly Germany as well. You know, a strong euro is never good for German manufacturing.
Well, they join the euro to get a weaker currency,
exactly.
So they're not going to be, although they say they want a stronger one.
Yes, I think you and I both know the weaker Deutschmark certainly benefited Germany by having the peripheral countries involved and weakening their currency. So, I mean, looking at Europe now, does that cause a problem, certainly for France and Germany going forward? And looking at, say, the DAX and looking at the CAC, is that going to have an impact now, a stronger euro for our European counterparts?
Well, I think it plays out in several ways. Firstly, if we start with the European Central Bank, it'll be putting downwards pressure on inflation, which has been trying to get it back up anyway. And of course, it has still got incredibly lax monetary policy, easy monetary policy, however you want to put that, negative interest rate for its deposit rate, still 60 billion a QE a month. So this poses a thing, because if you'd have gone to a textbook 10 years ago, they'd have assumed now the euro would be dropping like a stone in response to that. When it's continuing with it, most other places are at least stopped for now. And so, but no, what we're actually seeing is a strong euro. So it has a problem. As to which point you find that this hits euro area manufacturers is actually more difficult, because they seem to be in a good phase now. And we see with like the UK, it's taken quite a while if it's benefiting our manufacturers, for example, the reverse of a lower thing. So that might not be till next year. So there's a lot of things all in play at the same time, but some places will be affected, and maybe the weaker countries.
But you've already touched on the fact the market's reacting to the language and the change in language and not the event. It's better to travel than arrive, I think, an old market saying. So is the appreciation in the euro led by the market expecting in a year's time that Draghi is going to reduce the QE and potentially start raising rates?
I think so. I think that we saw this with the dollar and the Federal Reserve. It rose exactly on that. Travel hopefully and then arrive. Maybe not. So there's a feature of that. It goes back to something that's got discredited now, but for these sort of things, that's into rational expectations fear in economics. Financial markets can move, the real economy takes a lot longer, is the thing behind that. If we move on, there's another factor here, I think, which is once you get quite a lot of news stories on something, that tends to mean it's probably ending. BBC was particularly enthusiastic Now, as I said, people have already replied on this point on Twitter, so let me repeat again. I only happened to get the BBC Business News because I liked the weather first and still had it on. But they stated that we were going to, well, what is it? It's almost 1-to-1. Now, it's 1-to-108 against the euro. I think that's pushing it a bit. A lot of research things coming out, going that the pound euro is going to go to 1. How did that work out when they all said that between the euro and the US dollar?
Well,
is my point.
Exactly. And we were at near 120
Yes.
for euro dollar.
So sometimes peak news flow
yes,
is a sign of another turn.
yeah, we sit here with a paper in front of us saying,
Well, indeed, euro hits new 8-year high, exactly.
So exactly. So if it's making the front pages, it's time to be a contrarian and maybe support the Great British Pound. On that note, Shaun, thank you very much for joining us today.